Alright guys, so I just want to show you guys why I took the trade I took today on GBPUSD. Alright, just for your learning and so that you guys can really understand how to do these things yourself. Alright, so the first thing I did was to just check my dollar index. Remember that on the dollar index we had a bearish order flow on the monthly. Alright, if you refer back to the previous analysis I did, we already analyzed that the dollar was trading off a volume imbalance on the monthly time frame and was going to attack this old low that we see here. That's where the drawn liquidity is on the higher time frame. Okay, that's the sell side liquidity pool residing there, coupled with that tiny fair value gap below here and the bullish mitigation block right here. That is our drawn liquidity on the monthly. Right, then on the weekly, again we have a bearish order flow and we're looking at this sell side liquidity pool as our drawn liquidity. Then our daily time frame is also going to show you what we're anticipating to see in price action. Okay, the daily time frame also is a bearish order flow and we're looking to see price trading to this sell side liquidity. All right, so now this is one thing you need to incorporate to your trading, which is the weekly market profile or the weekly template. All right, remember that when I taught you guys the weekly template, I mentioned that the weekly profile is such that we anticipate to see price form the high or low of the week between Monday, Tuesdays and Wednesday. Once price forms the high or low of the week between these first 3 trading days of the week, we anticipate to see a reversal happening between Thursday and Friday New York session. All right, that's what we're anticipating to see. So if you study this week's price action, what would you see? You would see that on Monday, all right, this is Monday, price traded up into that volume imbalance to form the high of the week. Price traded up into this volume imbalance here to form the high of the week. Now this again tells you that a fair value gap or an institutional reference point can be retested as many times as possible. Look at this, it was retested here, retested the second times, retested the third time before we started to see price press deeper for this sell side liquidity pool. So at today's price action by London session, price had already traded into this sell side liquidity pool. I knew that we were going to see this reversal into internal range liquidity, this fair value gap here on the dollar. So I just went to the 1 hour and 50 minutes time frame. Okay, so just go down to your 1 hour and 50 minutes time frame. So this is the 1 hour time frame. Okay, if you just go to what you are looking for in the 1 hour is to see a clear break of structure or a clear bullish order block that supports what you are trying to do. All right, so check 15 minutes time frame. So it was on the 15 minutes time frame I saw that the dollar had already broken structure to the upside. All right, this was Asian session today. Okay, so look at this, price could not form lower low. All right, I'm trying to show you SMT divergence here. Price could not form lower low here, right? This is 730. Price could not form lower low, and then price broke structure. Price formed a low, formed the higher low. Okay, then we now see a break of structure here, tiny break of structure. Right here. Look at this, price could not form a lower low, it formed the higher low right here, from the higher low. Then it gave us a break of structure here, they returned into that bullish order block with a tiny fair value gap. Look at this, look at this tiny fair value gap order block. It has a tiny fair value gap attached to it. Right, the reason why the institutions are hiding it is so that you don't see it. Immediately I saw this on the GBPUSD at the same time. At the same time this was happening, this was GBPUSD, price had formed higher high. Remember, SMT divergence. Right, price formed higher high the dollar, on GBPUSD, price could not form lower low on the dollar. I knew that. Okay, so this was SMG divergence during the Asian session. All right, this was a smart money divergence that formed during the Asian session. Then in London, we now saw a break of structure again right here. Price from the higher high, then price broke structure here. It was a very clear trade I saw today. Broke structure, isn't it? Remember, we are doing this after price had taken out buy side liquidity as well on the dollar. Taken out sell side liquidity, on the dollar, and had taken out buy side liquidity on GBPUSD daily time frame. Let me just show you. Did you see that? Price had already taken out buy side liquidity on GBPUSD. Alright, so of course that's how reversal patterns print. Remember, once buy side liquidity is taken and price had traded into a bearish order block and implied fair value gap right here on the daily, then on the 15 minutes you now see a break of structure. That is a clear reversal pattern, okay, because liquidity has been taken. Coupled with smart money divergence, this guy forming higher high, the dollar was not forming lower low. So immediately I saw price traded into what's the internal range liquidity here. The only thing we can see here is this bearish order block. Okay, is there a fair value gap here? No, but there is an implied fair value gap. 50% of this week, 50% of this week, that's implied fair value gap. Alright, again, when using order blocks, remember I told you we use the order block with the largest candle body, so I was paying attention to this guy right here, and immediately price traded into it. I sold my first entry here. Okay, I sold my first entry around that region, and then look at this, price expanded, took out this low, boom. What is another entry? This was the New York session entry. I think this was induced by news, right? So this is buy side liquidity. Was buy side liquidity residing here? Price took out the buy side liquidity and traded into what? IWFED. What is the IWFED here? Institutional order flow entry drill. Okay. Look at this. Fair value gap right here. You can use this low here or that high. So fair value gap and fair value gap here by the left. You can see this fair value, IWFED. So price, the news induced that moved, take out buy side liquidity, and I sold again. Where's the door liquidity? Remember, this is low resistance liquidity run, guys. Look at this, low resistance liquidity run, trend line. That's what retail is seeing. Retail is seeing trend line. We are seeing all of these as liquidity. All right, also because there is a model right here, we want to see price come back to this tiny breaker block right here. Okay, price formed a lower low, then broke structure. What's the breaker block? This guy, lower low was formed here, then price broke structure. So that's a breaker block on 15 minutes. So you remember that model I taught you, breaker to breaker, mitigation to mitigation. So what do you have here? Price took out the high here, formed a bearish breaker. Did you see that? Price took out the high. What's the bearish breaker? This guy, that's a bearish breaker. So from a bearish breaker to a bearish breaker right down here, that was the trade for today. Even though I took out everything around this region, okay, because it's Friday, you have to reduce your expectation. Okay, take out something from the market, don't give back your profit to the market. So I just took out everything. Once price came back to this very big breaker block, not the tiny one, I took out everything. However, decisions went down to this, and also because at the timing, this was after 3 o'clock, around 3 o'clock, 3:30, sorry. It was at the close of the New York session, so I didn't want to wait till bond close. So this was it, guys. Subsequently, I'm going to be dropping out my trade commentaries, possibly before I go for the trade. I will do the analysis, and after the trade I'm going to show you what I'm expecting. I'm going to do this for extra 1 month just to see that you guys develop and become better traders, right guys? So that's it. I hope it's insightful. Stay safe.